In 2025, the question is whether Jake Claver is correct that the carry trade will end in Japan and whether XRP will emerge victorious and emerge as the day's hero. And that is the reason why XRP will quickly rise to $500 or $1,000. I wanted to dissect the theory put forth by Jake Claver. I wanted to live stream some more background information regarding our current location at the end of September, and how likely it is that some of these things may actually materialize. SBI and the Bank of Japan have ties to each other. A CBDC exists. The roof is being penetrated by oil. There are numerous factors that must come together just so for us to profit. However, there will also be many individuals who will suffer if we do benefit from this. I'd like to investigate all of that. Come on, let's get started. Prior to providing you with a wealth of information to bring you up to speed on all that is going on today, September 27th, I need Jake to provide his theory. Come on. Nearly no one is discussing the $10 trillion ticking time bomb that lies inside the financial system. We've discussed it a lot on this channel unless you haven't been here. The transaction is known as the reverse carry, and when it blows apart, we'll need something that the current banking system doesn't have. And that's where I believe XRP could be useful. This relates to systemic risk, financial infrastructure, and why Japan, XRP, and the digital yen may be the only thing preventing a worldwide collapse and preserving global liquidity. Hot. All right, we will now go over the definition of the reverse carry trade for those of you who have never seen it before. Global institutions have been purchasing higher-yielding assets in dollars, euros, and other emerging markets for decades by borrowing cheap yen at around zero interest rates. Therefore, they would borrow that yen from the Bank of Japan, convert it to any other currency they want using foreign exchange, and then use it to generate significantly bigger returns. After that, they owe the Bank of Japan nothing. The money is free, and the reverse carry trade is just that. The exposure is about $10 trillion. These positions will quickly unwind when rates change or FX volatility increases. All right, let's just demonstrate it really quickly. Let me demonstrate. Here is a detailed explanation of the unwinding process. When market conditions change, such as rising Japanese rates, declining forward asset values, or higher market volatility, investors choose to unwind their bets. Compared to keeping the position, this choice frequently foresees lower profitability or higher risk. Sell the Japanese yen bonds as the second step. The investor sells Japanese yen bonds, also known as nominated or dominated bonds. These bonds may be corporate overseas bonds or domestic sovereign bonds that were bought using borrowed yen. Through a broker, this liquidation typically occurs on the open market. Converting the proceedings back to the original currency is the third step. The investor must exchange the profits of the sale of the bonds into the currency required to pay off the original financing or to balance their portfolio. Therefore, whether they utilize dollars, euros, or PR. This step is especially important if the investment was financed by borrowing yen through a carry trade to purchase foreign assets with higher yields. Repaying yen loans or repatriating the money is the fourth step. Any yen borrowed for the purchase, which was frequently leveraged through the carry trade, must be paid back after the currency exchange. Japanese companies and other institutional investors may also repatriate. Return to Japan, particularly if local yields are increasing. Adjusting the market and portfolio is step 5. In addition to increasing demand for the yen, which often strengthens its value, the selling and conversion process exerts downward pressure on liquidated assets, which frequently results in price drops or volatility in international markets. Now let's return to Jake. In order to quickly purchase the yen back, investors will need to liquidate their overseas holdings. Therefore, before they can return those notes, they must sell in the stock market, gold, or another location, exchange it back to the original currency from the jurisdiction where they bought it, and then go through FX again to convert it to yen. Thus, this has a devastating effect on the global credit, bond, and FX markets simultaneously. What will happen then? You mean it's not good? Capital is returning to Japan like a tidal wave. The yen will soar higher when the dollars, euros, and all other currencies that people are selling to exchange for it plummet. The yen will be in high demand. Therefore, U.S. Treasuries will be dumped. Bond markets will collapse and yields will rise. Liquidity will disappear globally. Bond markets will crash very soon. Bond markets are the foundation of everything, right? Are you attempting to obtain a credit card, a mortgage loan, or something similar? Long-term bonds are the foundation of those. If those markets go down, you are referring to the collapse of, say, the US dollar or any other currency or bond market that will accompany the collapse of that currency. Correct. What would happen to your money, in your opinion, if you had dollars in the bank and the bond market crashed? It loses value steadily over time. In just 5 years since 2020, 25% of our dollar's purchasing value has already been depreciated. What would this do to that, do you think? Furthermore, I want to make sure that everyone understands how terrible it would be for everyone else who doesn't own, say, XRP. Holders of XRP would undoubtedly be fine if XRP is the solution in this case. However, those who own dollars in the stock market and other assets would be in financial jeopardy. It is comparable to March 2020, but even worse. There will be two choices for the Bank of Japan. They can either defend the bond market and run the risk of hyperinflation, because they will need to issue a lot of yen to purchase those bonds, or they may allow the yen to rise and destroy their exports. Unless they have a third choice in the back of their mind, it's a lose-lose scenario. In my opinion, XRP could be the missing component in this situation. Guys, please leave a comment below and share the video if you enjoy it and value, guys. Value exists. Let's leave today. Be careful.